Good afternoon, traders, and welcome to the Hot Stocks Outlook for January 26, 2017. So an extremely exciting start to the new year, Dow hitting record highs, and there's been a lot of really great opportunities out there in the market. But this is always a good time to really understand, why it's good to have a global approach and really understand how other markets can affect and influence and drive those markets that you're trading in. So we're going to be looking here at the VantagePoint Intermarket Analysis software, and we're going to go over all the interpretation of these charts. But, very important to understand that what VantagePoint is able to do is really account for how those other global related markets, like the gold market, the broader S&P, related stocks, ETF groups, how all these other related markets can affect and influence and drive the market that you're trading. And so this is why it's critically important for traders to be aware of those other markets, how they affect things. Especially we saw, the gold market moving up, those gold miners going up 15, 20% in a couple weeks. Those are the types of things that are just critically important for traders to pay attention to and incorporate that into their approach so they can manage positions effectively, make sure they're making the right decisions for their trading style. Now, we're going to be looking at Revlon here as well as a few other companies here. But again, the most important thing is that you understand how to interpret all of these indicators and understand what they're doing here. Now, we have Revlon here in some daily bars and candles. So the green days being up days in the market, red days being down days. Very, very simple. Now, against that price data though, you're going to see that there's a blue line and a black line. And this black line that you see on the chart, that's what we're going to discuss first. Now, that black line is what's called a simple moving average. So this is a very, very simple indicator. It simply takes, you could take the last 10 days of close prices, add all of those days together, and then divide by 10. And as the chart moves forward and a new day comes in, you drop off that 11th day, add in the newest calculation, and that creates essentially a moving average. It's going to change and fluctuate with what the market's doing. Now, that indicator, one of the issues with that is, it really is just a summary of what's already occurred in a given market. It's a moving average, sort of smooths out that data. And so the problem is that, those indicators, specifically simple moving averages, they only look at what's already occurred in the market, but they also only look at the one market that you're trading. So in this case, Revlon. And that's how it is just simply not able to account at all for how other related markets can affect and influence the future price moving forward of that stock. It's really just, again, summarizing what's really already occurred. Now, against that price data as well, though, you see that there is a blue line on the chart. And that blue line that you see there, that is VantagePoint's proprietary predicted moving average. We can actually see that PEMA there. Now, for that value to be generated, it's not simply looking at the past prices of one single market. What it's doing is actually incorporating data and information from those 25 other related markets. And some of these are huge macro markets like the dollar index, crude oil, the gold market. But there's also a lot of subtle relationships that take place in the market between related companies, how the ETFs trade. And this is so critically important to make sure that you're on the right side of the market. Because if you don't have a way of incorporating this information, it's often those big sort of moves in gold or the dollar or, the ETF group that can really catch traders off guard and have them losing money and in situations that they really don't want to be in. Now, traders utilizing this tool and this approach have it really simple for them. I mean, they really need to be focusing on a couple of things here. One of the most important things are crossovers between that blue line and black line and between those two values, because what it is essentially saying is that that predicted moving average, when it rises above the actual moving average, is telling you that there's been a trend change or a shift in the marketplace. So traders always want to pay attention to when those trend changes happen so they can ensure that they get in on the move early and make the best out of each opportunity, each trading opportunity. Now, in combination with that blue and the black line that we see there on the chart, you'll see that there's another indicator here at the very bottom of the screen. Now, this indicator is the predicted neural index. And again, it incorporates data from those other related markets and how they're affecting and influencing very short term the price of the asset that you're trading. So what this indicator is able to do is produce a very short term forecast. It's actually a 2-day forecast or 48 hours. Two candlesticks is how you should, can visually see this on the chart, but very short term strength or weakness in the market. And traders can use that to, again, help understand, hey, when do I want to be a buyer in this market? When do I want to be a seller? And when do I want to be more cautious, maybe accepting much better or reduced prices? So we see here in Revlon, we got this crossover to the upside. The neural index strongly there at a 1 and saying, look, over these subsequent 48-hour periods, expect strength in the market. And that's critically important for traders to understand, because if you want to be a shorter term day trader, if you want to add to your position, you really need to know, hey, over the next 48 hours, what should I be really doing here, and make sure that I'm in line with a very high level of accuracy as far as those trading decisions. Now, what you'll notice with this neural index is sometimes it pops down to a 0, but what you'll notice here is, in fact, over that short term, you are getting some weakness over these time periods. But as long as that blue line remains above the black line, and you actually see a huge amount of separation here, signaling that, look, that prediction is well above the actual moving average, and that trend is still in place. So it really allows traders to, regardless of your trading style, understand what you should do in a given market, making sure that you're, again, making good decisions in line with whatever that approach is. So, since that crossover, we've had about a 17.6% move higher, about $5 per share in Revlon here. But again, regardless of the style of trader, over these past 19 days, you want to be long over that 17, 18% move higher. So regardless of what you're doing, whether you're buying options, the software is really going to help you adapt and understand, hey, how should I position myself not to get really emotional each and every day with the moves in the market, and focus on that bigger picture and what's going to really deliver those profits for you. Moving on here, we got Wabash National, and we've talked about this quite a bit over some previous videos. Crossover way back here earlier on the chart. But you see that, you never get the blue line crossing below the black line. Sure, we get very close here, but it never says that that trend has reversed. And that's what's so critically important for traders, is to understand, look, if I'm a swing or a trend or position trader, I need to go ahead and hold my position. And we see, the market's moved up 55% over 52 trading days. This was a stock that was trading at $12 per share. So even if you're a smaller trader, you don't need to buy an awful lot of shares to make a lot of money on a move up, but you need to have the right tools that are going to, again, keep you in the position so you're not getting emotional jumping out of a position that's working and doing the right things for you. And when that time comes where that blue line crosses below the black line, then you can go ahead, take those profits, move on to another trading opportunity. Moving forward a little bit here, Yahoo. And I really just wanted to demonstrate that, even with companies with a lot of, fundamentals going on, getting, a buyout offers from Verizon and a lot of, uncertainty there, you see the accuracy of the forecast. So really, regardless of all this stuff that could be going on out there, cross over to the upside saying, look, now's the time to go ahead and get long Yahoo. And, since that period of time, we've seen that you've gotten a really nice move higher, about 15%. But look how these short-term tools are just so effective that say, look, expect weakness over these subsequent trading days, but the bigger picture blue line still above the black line, trend is up. Once that neural index pops back up to a 1, it's time to go ahead and make sure that you're in that market, because when these markets really start gapping, like we see here on the chart, there's no time to jump in there late and trade that. You have to be on board already to go ahead and make sure that you're making money over periods of time like this. Let's go ahead and move on to this last opportunity. Very popular company here, Tesla Motors. So, if you're trading in the market, trade these companies. Well, look, since early December, the VantagePoint software has been indicating, look, get long Tesla. This market is expected to move higher below, 200. You could have gotten into this market. And since that time, we've certainly had a extremely nice rally in the marketplace, moving up 33% over just the past 31 trading days. And again, when you look at the accuracy of this neural index, it only went down to a 0 for 3 out of these 30 days. But you actually see that, when it dropped down for 2 of these days, you're getting that weakness in the market. You can accept cheaper prices, expect that short-term weakness, but the trend still up. So saying, look, make sure that you are on board for this trend And again, holding that position, adding to it, whatever you need to do as a trader that really falls in line with your strategy and your approach and how you like to manage your positions in the market. So as always, guys, thank you all for watching. This has been the Hot Stocks Outlook for January 26, 2017. Best of luck there out to you in the market, and thank you all for watching. Bye for now.